Private equity money, it's coming hard for accounting. 10 of the largest US accounting firms now have private equity backing. In the UK, Grant Thornton, Evelyn Partners, the billions are pouring it, it's not slowing down. At least 12 major US accounting firms have accepted private equity investment, and the trend is just going one way. This is a monopoly play for them. They're buying up firms, they're merging them, they're cutting costs, they're building empires, and there'll be an exit for them at some point. And why are they doing this? Because scale builds power. 75% of the accounting profession are within 5 to 10 years of retirement age. It's a very aging profession. In today's accounting firms and practices, here's the big question. Will private equity make you rich, relevant, or redundant? We're going to unpack this on today's show. Private equity money, it's coming hard for accounting, and it's not just knocking politely at the door, it's barging in, check in hand, ready to reshape everything. We've spoken a little bit about private equity on this show before, but it keeps coming back. And here on the Accounting Influencers podcast, we equip you with the insights you need to stay influential, relevant, informed in your role so that you can lead better. And if you are leading in an accounting firm today, and a lot of people are, you're leading your clients towards good decisions, you're leading a team, you're managing projects, you might have a particular leadership role in your firm, but even the most introverted people in the world will influence and lead others, thousands of others in their lifetime. So if you are a leader in today's accounting firms and practices, here's the big question. Will private equity make you rich, relevant, or redundant? We're going to unpack this on today's show because what we've already seen in 2025 is unlike anything we've had in the accounting profession before. It's definitely changing the game. I'm only speaking for accounting, but it's in every sector, isn't it? And we've seen it revolutionize in some ways the sectors that they're in, but they're playing a really fast game. We see it in accounting tech as well. This is the show that gives you the stuff you need to stay current. And because it's moving so fast, we have to keep updating things like this. I just want to break down some of the trends in private equity that's given us this disruption and what it means for you as a leader, a partner, or an influencer outside a firm. So let's get into it. 10 of the largest US accounting firms now have private equity backing. In the UK, Grant Thornton, Evelyn Partners, and others, big ones, have sold stakes. The billions are pouring it. It's not slowing down. And this gives us evidence that private equity is starting to dominate accounting. That's just in the UK and the US. Less in Australia, but certainly it's coming. And if private equity sees a reason to be in accounting in the UK and the US, they're going to see it in many, many countries. 12% of UK accounting firms have already secured private equity investment. That's according to research from the Institute of Chartered Accountants in England and Wales, the ICAEW. 19% of firms, find private equity investment attractive and are considering it for future growth. These stats are real. 45% of mid-tier firms acquired another firm in the previous 3 years, and 55% are considering acquisitions in the next 3 years, signaling highly active and consolidating market. And the point is, a lot of this is private equity backed, because where's the money going to come from to buy these other firms and be acquisitive? 10 of the top 30 US firms have had private equity investment, which is a massive jump over the last few years. And you can check all the accounting news outlets to see the granular details of these deals. Since 2021, at least 12 major US accounting firms have accepted private equity investment, and the trend is just going one way. So the market impact is sizable. No firm's too big to invest in. You may argue that some firms are too small to invest in, but the influx of private equity has brought billions into the US public accounting sector in just a few years, fueling consolidation, disrupting the market, fueling technology investment. So we're going to analyze what's going on here, what you need to know as a player, as a pawn, if you like, in the game, because you'll be experiencing it firsthand. And if you're not, then your colleagues, your peers, your alumni, they're going to be talking about it too. Private equity firms are not interested in slow organic growth. This is a monopoly play for them. They're buying up firms, they're merging them, they're cutting costs, they're building empires, and there'll be an exit for them at some point. And why are they doing this? Because scale builds power. Bigger firms can cross-sell services, they can dominate regions and sectors. They can offer bundled solutions that traditional partnerships can't compete with. And we talked a bit about the partnership model, and is it being eradicated? Is it becoming irrelevant in today's world? You might be buying into the partnership structure. Some partnerships are alive and well for sure, but there's disruption. So if you're running a small or a mid-tier firm, you're probably a buyer or a seller, or you're going to be squeezed out. We've said before, 75% of the accounting profession are within 5 to 10 years of retirement age. It's a very aging profession. There are young people coming through, but not as many as we would have hoped, and maybe not as many as are going to be needed. So the old model of scraping together partner capital to upgrade your software stack, that's dead. People are not willing to throw thousands into a partnership model in the hope of getting that equity back as they retire. And private equity investors, they're pumping millions into buying these partners out, into automation, into AI, into advanced analytics, into cloud systems, not because it's trendy and because all the other sectors are doing it, but because it works. It drives efficiency, it improves margins, and it future-proofs firms, and it safeguards their investment. And that's where they plan to make their money. So if your firm is not automating compliance and is not offering data-driven advisory, you're toast, probably. And there's a lot of firms, particularly smaller firms, owner managed firms, they won't sell. They're not digitized. They're not automated. Only 1/3 of US accountants automate a bank feed. That's research from Zero. So if 2/3 are not even automating connecting a bank feed for real-time data, what does that say about how quickly the profession is advancing and keeping up? So a lot of these firms and owners are going to be irrelevant and not going to have anything to sell beyond, say, a book of business. So a lot going on here. Another impact of a private equity-driven accounting world is the phasing out of this classic partner-led model. It's slow, it's political, it's too risk-averse. I often quote Mark Koziel, who's now the chair of the AICPA in the States, and he stood up at a conference I chaired at the International Accounting Forum here in London a couple of years ago, and he said the partnership model is dead. And he followed that with principally because partners cannot be managed, which is a really valid point. They all have their own agenda, but the managing partner role, can really partners be managed? Does the partnership model work? So it is slow. It is political. There are different agendas. It is probably too risk averse. How many partners have vetoed an investment in technology or a drive for new talent because it's going to, and higher salaries because it's going to take money out of their pension pot? So private equity firms want a more corporate approach, a more board-led executive style management, clear accountability, decisive leadership, well-defined metrics. And it's not about consensus anymore and getting the majority of partners to agree on something. It's about speed and agility in decision-making. So if you're a partner in a firm that's been used to having a vote on everything, brace yourself, because this shift is happening and fast. And there's a lot of firms starting up without the partnership model and rejigging what they're doing so that they can bypass the whole partnership structure and doing it a different way. So just because you're a partner doesn't mean you're not in charge anymore. It's still aspirational to become a partner. We're not saying that, but there's implications here for the attractiveness of partnership. Who would buy into a partner role that offers them less power, less autonomy, less perks, less of a payout? So you can already see that it's about operational efficiency. It's about value creation. Private equity, they're also involved. They don't just want to write a check and sit back. They push hard. You talk to leaders in accounting firms that are PE-backed. They push hard on costs, on profitability, on performance, on metrics. And that means streamlining, outsourcing, rethinking service lines, monetizing client bases, digitizing everything. If you are inefficient and bloated as an individual or as a firm, a team, a department, a service line, you're stuck in legacy processes, you're on the chopping block. So we want to make you relevant and current and keep you informed and on the edge here. So There's a lot you need to be mindful of, and we want to get you ahead of the change here on the Accounting Influencer podcast, because a lot of accounting professionals are still behind the curve on this. And a quick side note, we have a lot of listeners, watchers for this show. If your company provides tech or software solutions for accountants and you want to partner with us, we have room for one or two sponsors for the Accounting Influencer podcast with our international audience. Sponsorship means visibility across our platforms. Reach out to me on LinkedIn to open a conversation and we can get you on the show. So another dimension to the private equity play is how it's giving firms a weapon in the talent war. We've talked a bit about talent on this show, and it's competitive out there. We know the talent game is changing in that some of the big firms are laying off talent they overhired during the pandemic, and now they're jettisoning jobs. Automation and AI plays a part in that, but the work that accountants are doing now, a lot of it is being outsourced and taken offshore. So you still need to be competitive for the very best talent, particularly the senior talent, those strategic hires. We know that accounting is bleeding talent. There's too much work. There's not enough reward. The starting salaries for accountants are behind lawyers and other comparative professions. So enter private equity. It pumps money into accounting firms that can then be in a position to afford higher salaries and better packages, equity incentives, faster progressions. That's the flatter structures of a private equity-backed firm with a corporate board. And if they have the appetite, and private equity firms do, they've certainly got the budget for serious employer branding in making your firm, if it is PE-backed, the go-to firm. It's marketing your firm as a better place to work. So if there is a fight for talent, the firms that can offer the best packages and really talk about their success stories of why they're a great place to work, they are going to win the talent war. And Jeff Phillips, my co-host for a previous accounting talent podcast, he said to me, the war for talent is over and the talent won. Now, I don't necessarily know if that's true these days. The talent still have a say in things, but private equity is also having its say. So if you are struggling to attract or keep great people, and your comp structure's not changed since 2020, then you are going to be in trouble. If you need more cash coming in, where would you go for that? Private equity. What about audit? We know audit independence is under fire. The regulators are watching closely. It creates a tension because PE wants a return, but audit firms are supposed to be independent and neutral and boring and uncompromised. So now firms are being split. The audit might stay under the firm's control. The advisory would go to some PE-backed entity. And that works for now, but there's a risk of blurred lines, perceived conflicts of interest. We hear a lot about trust erosion, not just in audit and technical competence in that regard and massive errors, but it goes across a lot of professions. Trust in the government, trust in the education system, trust in the judicial system, trust in corporate brands are at an all-time low, trust in relationships is low, divorce is high. So trust is an issue. If public trust in audit wobbles and even collapses, the whole profession suffers. So private equity is having a say in that. And finally, let's talk about culture. Private equity moves fast. Culture is often organic. You can't force culture. And traditional firms don't move fast, certainly not as fast as private equity. So when you get two objects colliding like this, you imagine blending the culture of Coca-Cola with Panda Pops, or blending the culture of Coca-Cola with other names are available. But when two brands, two firms collide, two different sets of values, two different mission statements, two different websites, two different groups of people, this friction. So private equity against the culture of your firm. Partners, we've said, they're used to the autonomy, the long-term relationships. They've now got to answer to corporate boards and target-driven spreadsheets. Consolidation smashes different firms and cultures together. And it's messy. Morale dips, politics intensifies, people watching their backs, people uncertain about their long-term future. Some people walk. It's dry tinderbox, looking for a flame. And if you're a firm leader, you've got to navigate these uncertainties. You've got to lead in the fog and the fire, as I say. It's all happening around you. You're in the eye of the storm, and you've got to Watch these changes carefully and make sure you're ahead of them. And nobody thinks private equity is evil. It's just different. It brings money, it brings speed, it brings strategy, but it also brings pressure, it brings control, it brings short-termism. So you've got to ask yourself here, are you ready for the pace of change? Is your firm ready? Can you and your people handle the shifts that are coming to a firm near you? Are you structured to grow or just survive? It's no longer about if private equity will reshape the profession. It's about how much of it is going to be left unchanged. There are two key drivers of changing the profession right now, two major ones. One is artificial intelligence and the other is private equity. They're both super disruptive. So I want to share with you as we draw to a close some of the risks of private equity, because it's important you know all sides of this equation. Short-term thinking can kill long-term value. That's obvious. Some private equity firms push for profit above all, and that means cutting corners on service, withdrawing some service lines and support. It means cutting overload teams. It means losing sight of client needs. That's a possibility. Short-term thinking can kill long-term value. Another aspect, a risk of private equity is reputational risk. One scandal around a compromised audit with its independence or data misuse can damage not just a firm, but the profession's standing. Private equity is muddying the waters. Be mindful of that. Third risk is culture. Culture matters. And if you've got the soul of a firm, what's left? You've got a spreadsheet, and you've got a website with a logo, but it changes. And yet this is the new normal. This is what I'm leaving you with. In 2030, the majority of the big firms globally are going to have some form of external investment. That's the path we're on. And 2030, that's in 5 years' time. If you are still in the game, this is what it means for you. If you're a firm leader, you've got to understand how this works. You've got to speak the language of private equity. You've got to know the vocabulary. You've got to know what private equity wants, and you've got to have a strategy to either join them, compete with them, or collaborate with them, or get out. If you're a partner, don't just think about your payout. If you're advanced in your years or seniority, think about your legacy, your clients, your people. Try and do the right thing. I know money talks, but hopefully you've earned enough to do the right thing. If you're a rising star and this is all happening above you and around you, this is a great chance for you to accelerate, to penetrate the ranks a little bit further. Private equity firms reward performance, and they reward it fast. You will get to where you're going faster in a PE-backed firm, probably, than a non-PE-backed firm. And before I wrap up, if you are one of the busy professionals out there that have been thinking about building up your personal brand and your thought leadership, you can't find the time, you don't know where to start with video or articles, I can help. I run a service for accounting leaders and owners where we do short video interviews and we turn those into blogs and snippets and articles and clips. It's quick and easy, it saves you hours, and it's an interview style with me. So reach out if you want to learn more. I'm on LinkedIn. So final thoughts, closing thoughts. Private equity is not a fad. It's not a trend. It's a structural shift in how accounting firms are owned and how they're ran and how they're scaled. So you can ignore it and you'll be irrelevant. You're going to be toast. You can engage with it smartly and unlock some growth and relevance and legacy and importance and purpose. And if you don't know what the firm's going to look like in 5 years, then you need to gen up, as we say in the UK. You need to upskill. You need to get informed. What's your firm going to look like in 5 years, and what will your role be in that? If you don't know the answer, you've got to learn quickly or you're going to be behind. We'll catch you next time on the Accounting Influencers Podcast. Have a great day. Go out there and make a difference.